In this week's episode of the Stockscores Market Minutes, I'm going to show you my day trading process. We will use Thursday's trading action from last week as an example. I'll then do my regular weekly market analysis. We'll do a market scan in search of opportunity and look at the day trade of the week on AMD. Okay, so let's talk about my day trading process. My strategy and approach for day trading the stock market is entirely algorithmic. And what that means is that I don't trade on gut feel or hunches or tips. I trade based on mathematically derived formulas that identify the stocks that have a higher probability of moving higher. And when they do move higher, they can go much faster than the overall market. Now, I also short sell stocks, so in that case, of course, we would look for stocks that are worth shorting. So it's an algorithmic trading strategy, and the basic concept is that it seeks Stockscores action candles, and that's my own indicator, and I'll show this on a chart in a minute. And we do that on the 2-minute time frame. So I'm looking at 2-minute charts going back a couple of days, looking for, again, my own indicator called the Stockscores action candle. Now, any of my students of the Active Trader membership at Stockscores can get my Stockscores action candle, and again, I'll show that on the chart on the next slide. Now, we combine that action candle with a few other rules. We ultimately can improve our results by visually inspecting the charts for characteristics of alpha stocks. Don't have to do that, but it does improve results. It can be entirely algorithmic and you don't actually look at charts, but again, most people can't do 100 trades a day, and that's the number of good trades that this strategy will generate each day. All right, so let's take a look at an example of a chart here. And this is a stock that, again, triggered on Thursday of last week. And MCHP is the symbol. There's the action candle right there. In terms of those alpha characteristics, it was a stock that was in an ascending triangle pattern. It broke out from that ascending triangle. Again, this is the 2-minute chart. You can see that up there. The volume was higher than normal. The price action was abnormal. That's what creates the action candle. You can then see that the stock moved very quickly. Remember that this is a 2-minute chart. So each one of these bars represents 2 minutes of trading. And so from 9:38 when this stock triggered its action candle until just a little bit before 10:30, that stock had gone up 9 times its risk. And so if the risk taken on this trade was $100, it ultimately went up as much as $950, and it finished the day right there at about $900 of profit for that trade. Now, how do I find these? This is where we get into the process. So what I've done is I've created an algorithm that I run in a program called TradeStation, and it seeks out any stock that makes an action candle. So you can see here this is running live, and again, I just recorded this from Thursday's trading. And what it is doing is going through every stock that trades in North America, or actually not North America, just in the US, and it is looking for those stocks making action candles. And when it finds one, and it does this all in real time, it will trigger an alert. And so you don't see it now, but down in the bottom right-hand corner, a little window will pop up as an alert, and it will display in the top line of this particular window right here, which is my window for buy candidates. It will display the symbol, the time of entry, the entry price, the capital required to take that trade, the number of shares, and then it also tracks the performance once a trade has been made or once a trade has been identified. And all of performance numbers are in risk-reward terms. So FET triggered at 232. It made, or at the time I recorded this video, it was up 2.67 RR, which means for every $100 risked, it was up $267. Now we've got some values here for some of my other indicators. They're built into the strategy. You don't really have to pay a lot of attention to that. In this particular case, that trade was requiring $5,528 of capital. Perhaps you could have leveraged that with margin, and it had a number of shares of 3,330. So that's what's running in real time. Now this window here is for my longs, my buys. This window here is for shorts. On Thursday, we didn't want to take shorts because of something called market factor, which is driven by the S&P chart, which is down in the bottom left. This window here is for another strategy I have called the simple swing strategy. It's a swing trading strategy, which means we hold stocks for multiple days. I'm not going to get into that today. I want to focus on the day trading strategy. Now in the bottom right are my alpha stock picks. And so this is actually a service that I make available to my active trader students where they can watch this screen. I'm watching this screen myself to identify the stocks that I'm going to buy or short, but I also try to help my students and my members of Stockscores by sharing with them the stocks that I like the best. And that's what is down in the bottom right-hand corner. And here you can see the RR, again, at the time that I recorded this. It's always changing. What I want to do now is go to the next slide where I'm going to summarize all of the what I call the alpha stocks. So this was the alpha stocks from Thursday. And again, these were the ones that I highlighted for the participants in my active live service. So for example, MCHP triggered at 9:38. The entry price was $99.85, 270 shares, and it required $27,000 of capital. Now this capital number here is before margin. So you can divide that by 3, and you would basically have about $9,000 of capital to take that trade. At the time that I recorded this, that position was at 9.17 RR, which means for $100 of risk, it was up $917. Now, of course, you have to back out commissions. You're going to be around $900 after commissions. And then we have something called max RR, which is how high it went after the entry signal. In this case, it went up as much as 10 RR. So it was actually pretty close to its high of the day at the time that I recorded the video. All right, and then finally, what I'm going to show you is the performance numbers by the end of the day. So this is just an Excel spreadsheet. I took all of those trades into the end of the day, dropped them into a spreadsheet so I could calculate the total capital required and the profit and loss overall. So here you can see all of those same positions, and here is the capital required, and then this is how much capital is required with margin, because again, we can margin trades 3 to 1. Now you can't margin every stock. FCell is a 64-cent stock. You cannot margin that. So you'll see there that the capital required is the same as the margin capital. They're the same. However, most of these are going to be 1/3. So Teva was $10,700 of capital, but you only have to put up 1/3, so that's $3,574. Then what I'm doing here is summing the total capital, so it's about $47,000. Those trades earned $4,075 at the end of the day, so you exit right before the close, and that represented a return of 8.68% on capital. So $4,075 is an 8.68% return on that capital required. And that's my day trading process. Thursday was a great day. They're not always going to return 8.68%. I'm quite happy if I can earn 1% a day. But if you do the math, if you can make 1% a day on your money, you are doing great in the market. And now on to the market analysis, starting us off with the U.S. markets. Let's take a look at the S&P 500 as we always do. And you can see here that with that trade news, we have broken out to new highs again on the weekly chart. We're in a pretty steep upward trend right now, really running away from that upward trend line that's longer term. And that means that there is some risk of a pullback here, but until we see weakness, we should just continue to ride the bullish trend. Looking at the shorter term 30-day, 60-minute chart, we're building a nice ascending triangle pattern after the trade-related breakout on Thursday. And that pattern should lead to a break to the upside. However, as again, we are getting a little bit overbought. And so I think that you want to remain bullish on stocks, but at the same time, cautiously so, because if there is a pullback, it could happen soon. Next up is the Russell 2000. And you can see here that we had that recent breakout. I've talked about this for a few weeks, and we're slowly inching our way higher. I think that that's ultimately where we're going to go. And so small caps continue to be a decent place to look for opportunities. On to the Canadian market, starting us off with the Toronto Stock Exchange 60 on the weekly time frame. We have this upward move and a little flag pattern pulling us back to the upward trend line. We closed above the open last week, and so that probably leads to a continuation of the upward trend. But until it does, I think we should remain relatively selective on Canadian stocks. Looking at the shorter term chart, you can see that we've broken this pullback here. We've built some rising bottoms. So we're slowly inching away higher, but there's a lot of resistance to deal with. So it's kind of a neutral picture in the short term. TSX Venture continues to be a lousy place to be for
short-term and long-term investors. The trend is down. There's really no sign of life here. And so until there is, I would be very selective on this market. On to currencies. Interesting chart this week because the US dollar is breaking the upward trend line from a falling top. And you can see here that it's not a strong breakdown, so I'm not too concerned about it yet, but it could lead to some more weakness. And so you want to watch if we start to move down through this support level. I think the US dollar will be destined to go lower. Canadian dollar, with that weakness in the US dollar, gets a little bit of a lift this week. It also helps that oil is firming up. Of course, that helps the Canadian currencies and Canadian stock market as well. You can see that we're still in this ascending triangle pattern. Until we can break out through that resistance, I wouldn't get too optimistic. On to interest rates. Very quiet market in the bond market. We had some moves up and down, but we ended up finishing near the open for the week. And so it continues to be a long-term upward trend, but in the last 3 months, really this bond market has gone nowhere. And commodities, we've got gold, a little bit of strength this week, but still inside this little flag pattern. And until it breaks out of that flag pattern, I wouldn't be too enthusiastic about gold. Oil is interesting because, as I mentioned last week, it's breaking that downward trend line, building some rising bottoms, a little bit more strength this week. Volume is quite low, and that's a concern, but I do think that oil is more likely to go higher than lower. And finally, the fear chart. You can see that fear is at a low point. Investors are pretty complacent right now about the prospect of a correction. So looking by ratings then, bullish on both time frames for US stocks, bullish long-term for Canadian, neutral short-term, neutral on both time frames for gold, and bullish on both time frames for oil. U.S. stocks broke to new all-time highs this week on positive China-U.S. trade news. We go into next week in an upward trend, but somewhat overbought, making a short-term pullback likely. The U.S. dollar showing signs of weakness. Oil starting to turn, gold is quiet, and fear is low. All right, let's jump over to the Stockscores website and do a quick market scan here. And you can see that the filters are not set yet. So what I want to do is select a preset scan. And this week, I'm going to run the Stockscores Simple Weekly US, but I'm going to, sort of restrict the prices. We're going to look for stocks between $1 and $10. You can do that fairly easily with this tool. You can add in other filters. That's the only extras I'm going to do. Run the market scan. It goes through every stock trading in the US market. I found 52 that meet those criteria. And then I look at the charts looking for the right kinds of patterns. Now, this is a 3-year weekly chart. And I'm looking for basically stocks that come alive from low volatility. So for example, SAVA on the weekly, you can see it was very boring and it started to come alive in the last couple of weeks. Now I can zoom in on this to look a little bit more detailed into what's been happening in the short term. And you can see for the past 2 weeks, it's getting some volume, starting to move out of this pattern. It's a pretty good chart. I would rate that a 6 out of 10. Moving along, NIHD also looks interesting. I can blow it up. You can see very quiet, boring trading coming alive, but it'll show itself a little more clearly when I zoom in on the daily time interval. And there you can see this week we had this break through resistance from some rising bottoms, and that is an indication that that stock is likely to go higher. I would rate this one a 7 out of 10. All right, back to the presentation. Let's take a look at the day trade of the week. And this comes from Thursday. Thursday was a really good trading day. And AMD meets the requirements of my day trading strategy because it made an action candle right here from this low volatility sideways trading and then went into a very strong trend where it moved a 9 RR gain. So if we look at the economics of the trade, for $100 of risk, you would take 320 shares. That was a position of $12,742, but because this stock is marginable, you would only have to put up 1/3 of the capital, so that would require $4,250. As I said, it earned a 9 RR, 9 reward for risk, which is a $900 gain. Sorry, it says $9 gain. It was a $900 gain for a 21.1% return on a 1-day hold. All right, well, that has been the Stockscores Market Minutes for December 16th, 2019. If you like the content, please click on the like button, leave a comment, subscribe to the channel, and most importantly, trade well.